Hello, and welcome to the Logistics Management Podcast. My name's Jeff Berman. I'm Group News Editor for Logistics Management Magazine and also the Peerless Media Supply Chain Group. Today, it's a real pleasure to welcome Susan Spence to the podcast. Susan serves as chair for the prestigious ISM, or Institute for Supply Management Manufacturing Report on Business, and she acts as the official spokesperson for that report. Susan holds this position in a volunteer capacity, contributing her industry expertise to one of the most closely watched economic indicators anywhere in the world. She retired from FedEx in July 2023, and after she joined in October 2013 as a VP of the newly centralized Sourcing and Procurement Group. Her responsibilities included leading a team of more than 250 professionals, managing more than 25 billion worth of spend systems and policies related to the corporation's global sourcing and procurement activities. Sue is a member of several supply chain management industry and university councils. And back in 2020, she was honored with the Institute of Supply Management's Shipman Gold Medal Award, a recognition of individuals whose career accomplishments have promoted the advancement of the procurement and supply chain management profession. Before joining FedEx, Sue spent 28 years at United Technologies Corporation in positions of increasing responsibility at the aerospace divisions of Pratt& Whitney, Hamilton Sundstrand, and Sikorsky Aircraft. And she also served as Director of Supply Chain Management at UTC's Corporate HQ, where her team earned Purchasing Magazine's annual Medal of Excellence Award and was also chosen as a YWCA Woman Achiever in Business. Her career has included positions in both supply management, operations, transformation, and also continuous improvement. She received her BA in economics from the University of Connecticut and an MBA from Rensselaer Polytechnic Institute. She has two adult daughters living in Boston and New York. Hey, Susan, welcome to the podcast.
Thanks, Jeff. I'm really happy to be here.
Yeah, absolutely. It's a real pleasure to have you on board for this podcast. I know that we've for the audience, Susan joined ISM earlier this year, replacing Tim Fiore, who had been there for a number of years. So she had tall shoes, big shoes to fill, and she's done a great job. So, Sue, why don't we start with sort of a basic overview simply of ISM, its mission, its membership, things along those lines for those in the audience that may not be familiar.
Sure thing. Well, ISM is got over 50,000 members across 100 countries, sorry. It started way back in 1915 as a group of purchasing agents looking to professionalize the field. It's grown into a global leader in supply chain education, certification, and economic research, and reports like PMI are watched around the world. Fun fact, PMI first came into being in 1930s during Herbert Hoover's presidency, and he wanted to measure what was happening in the economy and navigate through the Great Depression. Over the years, as the role of purchasing has expanded, so did the organization. In 1968, they changed the name to the National Association of Purchasing Management, which reflected how the field was evolving, not just about buying anymore. It was managing suppliers, materials, and strategy. And back in 2002, the name changed again, this time to the Institute for Supply Management. That shift really marked the move into a more global strategic mindset. Today,
Okay.
ISM is a major voice in global supply chain around the world, and our monthly PMI report goes is a go-to economic indicator. It's watched by Wall Street, the White House, and supply chain pros around the world.
Yeah, the great overview. Thanks for that. So, speaking of the ISM's Manufacturing Report on Business, which you and I discuss on or around the first of every month, Susan, what are the sort of, I guess I'll make this a two-part question. I guess part one being sort of, what are the key objectives of this report? And then, then we can jump down to sort of, the current state of manufacturing and sort of what the data points in the monthly report have been telling us of late.
Sure thing. Well, the purpose of the report is to inform the reader on the current health of the manufacturing sector. We all watch earnings reports, but those are looking back 3 months. Our report is a summary of hundreds of purchasing and sourcing managers' answers to monthly survey questions about orders, including export orders, backlog, production, employment, prices, inventories, both at the customer and in-house. imports, and supplier deliveries. And this gives us the most accurate current depiction of health of the companies in these 18 sectors that we measure. The professionals that are paying attention to these reports every month are going to see trends that's going to help them with decisions such as when's the right time to negotiate or renegotiate a supplier contract. When do they need to put risk mitigations plan in place to help blunt effects of shortages and price volatility? And even having a better understanding of employment and what's going on in their sectors for recruiting purposes. And the second part of your question is, how's it looking? How do we assess it?
Right,
And
right.
so obviously, I'm going to talk about last month's report. On Monday, we publish the current one.
Yep.
So, the first thing I want to remind folks is over a longer period of time, any PMI above 42.3, we say is generally an expansion of the overall economy. But, last month's report, we were at about a 49.1. If you take a look at the PMI history, and that's in our report as well, we were in expansion until March. And that's around the time the first, big news on from the administration on tariffs happened.
Hmm.
So, right now, the demand indicators of new orders, new export orders, and backlog, they're all in contraction. And one curious thing that people have asked me about on last month's report is we had a little bit of an uptick in production and employment, which is normally a good sign. But I'm talking about those as a blip. We have a lack of new orders, a lack of new export orders. We have 67% of manufacturing GDP in contraction and 28% in strong contraction. That means a PMI of 45 or less. So it is not good news right now. We are not crying wolf and saying that everything's a disaster, but we have had now 8 straight months since these tariff and trade policies have come along that is really, really taking a toll.
Absolutely. And why don't we sort of peel the onion a little bit in terms of how those tariffs and trade policies are taking a toll? You can't help, and I asked that, Susan, because in looking at the report, especially the most recent one, you sort of can't help but notice what a what a ride it's been for the manufacturing stakeholders in terms of the uncertainty, the inability to really make long-term planning decisions, capital investment decisions, hiring, etc. I mean, it seems like it's had a tough impact all around on many fronts. Am I on the right track there, or are there
You
other things?
are, you are,
Are there other things as well that that people should be aware of and know about as it relates to the impact of trade and tariffs on
right.
manufacturing?
Right. One reason I've only been doing the report since May, but one reason why I think it's not worse is that we have slash had, depending on your viewpoint, a
Right.
pretty strong economy going into the new administration. But it's not just the trade policies and the very huge numbers that get thrown about as far as percent tariffs, but our panelists continue to talk about whiplash. So just when you think you know how bad it's going to be, something changes and then changes back and then changes back. And, that has frozen decision making. So, if you were a company that was going to talk about, investment in capital projects and, people leave, right? They retire, they move on, the hiring and the backfills of people in this investment, it's being stymied because the tariff numbers not only are huge in some cases, but they're changing a lot. So what
Hmm.
happens with uncertainty? You stand still because your decision today could be a disaster months from now, right? Thinking about, companies that would like to maybe open manufacturing in the US, right? That is one of the administration's tenets about, why we want to reinvest in manufacturing in the US. Okay, but if you dig a hole in the ground and you start building a factory, that takes some time. What if
Absolutely.
everything changes greatly and now that's a bad decision? And then think about this, the raw material input prices, right? Some companies have great margins, some have small margins. The cost of their goods sold is going to vary greatly with some of these tariffs. So where else are they going to look to preserve their margin? It's their job to make money. And naturally, let's not go spend, millions of dollars maybe building a factory or buying new equipment. And let's just hang on and not backfill, Sue Spence's role because frankly, that's one way to preserve it.
Hmm.
So, with new order and new export orders continue to be weak, if you think about the supply chain, then you have lower production because your backlog, your book is not good. So the pipeline is got empty and it's staying empty. And once in a while, you'll have a uptick, customers at some point have to reorder in some cases, but it's not sustainable because of the uncertainty and the chaos. So I don't think anyone wants to see a 30% tariff or a 20% tariff, but not believing it's going to stay that way has caused this, this frozenness in decision making.
Absolutely. So as a follow-up, let's take a look at tariffs and trade policies, sort of from a manufacturing sourcing perspective. And I just wanted to cite a recent New York Times report. I'm going to quote it directly so I don't mess it up, but I thought it was pretty telling, and I'd just like to get your take on it. The article had said industry analysts say some factories are weeks away from stopping production if they do not receive more shipments of Chinese rare earth metals and magnets. And some firms worry that conflicting laws and directives from Beijing and Washington prevent them from complying with both. Now, I know that President Trump and Chinese President Xi met yesterday, and it looks like there were some signs of progress. So maybe we table that for a minute. But how should manufacturers, how should industry stakeholders be sort of viewing that premise?
Yeah, it's a great example that you cite. And I think about with the whiplash going on, and you think about our trading partners, of course, there's going to be reciprocal actions, right? They're going to use whatever leverage they have to protect their economies, and we would do the same.
Hmm.
So unfortunately, some of the manufacturing sectors, I think about transportation equipment, for instance, massive increases in raw material prices, think aluminum and steel, and also shortage of goods, think rare earth magnets and batteries and things like that. And so some of these companies are just getting hammered on multiple fronts.
Yeah.
I am very encouraged and hopeful about a Chinese trade policy. It's our biggest trading partner. Tim Fiore said in one of his last reports back in the spring, if you start to solve China, it's not everything, but it's the biggest thing. So the other problem, though, is let's say that there continues to be good news and there's a deal, there's a contingent of people that have trained to just say, wait for it, because maybe something is going to happen and now we're going to undo that. So it's not just, lobbing out the threat and then negotiating a deal. The question now becomes, well, how long before that's now pulled off the table? Because that seems to be the pattern here. And it's really tricky, really tricky.
Yeah, yeah, very tricky to say the least. Um, so another recent development, Susan, was yesterday's announcement from the Fed or the Federal Reserve rather. Their Federal Reserve's Open Market Committee met this week, and
Right,
they lowered the target range for the federal funds rate, as was widely expected,
right,
for the second consecutive month. This time by another quarter point. So
right.
the current rate is now 3.75% to 4.0%. Simply put, what type of impact could that have on manufacturing?
Normally it would do its intended effect. It would spur the capital investment because cost of borrowing obviously lower for companies. But it's not going to blunt the effect of tariffs. And I look, that's just not Sue's opinion. Our panelists have been saying that the tariff chaos and uncertainty and whiplash and the pure number in some cases is so huge that an interest rate cut is just not going to all of a sudden spurn decision making and hiring people because this other thing is, the driving up of the cost of goods sold and what they're going to have to pay for
Yeah.
the commodities. It's just unfortunately, it's not normal times, so it can't be a silver bullet. Although I feel like tariffs themselves and settling down on that is about as big as a silver bullet you can get because we've been having that as a singular issue. 55 to 80% of our respondents every month are just tariff, 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 and it's killing us, and we don't know what to do, and we're frozen. So the interest rate news is welcome and good. I fear that it's just not going to have an impact that some think it should, right?
Understood. Understood. So some of this we covered a few moments ago, Susan, but when we talked earlier this month about the September report, the September manufacturing report on business,
Right.
you had noted that new orders contracted after growing in August with the possibility of an uptick in backlog of orders. Um, and we'll learn about that early next
Yeah.
week in your next report. Also, production is slowing, relatively slow growth there too. So, uh, that said, you noted that what we're seeing in terms of growth signs, it really may just be blips, and not serve as more of a major indication of the tides turning in manufacturing,
Right.
especially when we look at your panelist comments.
Right.
So, a long-winded question there, but basically, where does that leave things now? And what are you expecting to see over the balance of 2025?
So, based on what last month's report said, and the sentiment is important, right? So, for every person giving us a positive impact, there's been six that's saying not good, right? We look specifically at new order comments, right? And, demand softening. For every person that says demand is coming back, there's a person and a half saying, no, it's not, it's still frozen. So, all that flows through. So, when I saw a temporary uptick in new orders, my wise mind told me, okay, you're going to see it move through the supply chain like a python eating a rat. And that's a gross reference. Sorry for it, but it's what came to my mind. Okay, so now it'll travel through, right? You've got a slight uptick in new orders, and I would expect them to see production go up and then come back down. I would expect backlog to be up and come back down. I don't think you're going to see a huge increase in hiring because all indications from these panelists, especially with regard to customer orders, is customers are holding back. They don't want to buy because we got to pass along these tariff increases. So they're going to hold off as long as they could, right? And maybe customer inventory gets to a point where it's so low that they don't have a choice. So everything tells me that I'm seeing and reading, and the sentiment especially, is that it's a blip. And these panelists are telling us exactly why. It's really, really great info if you pay attention to it.
Right.
And one other thing on employment, manufacturing employment is only 10% of this country's employment, but we see things first, right? So if we see the softening happening, eventually it'll carry over to services, right? It's
Hmm.
interesting to see, even though there's no BLS data report coming on employment, right? We saw fewer jobs added. You're seeing upticks in unemployment claims and continuing claims. So, the thing that turns it around is policies negotiated, hopefully not huge and egregious numbers that are going to drive up the cost, but there will be a cost that'll get passed on. And
Sure.
once those deals are done, and we've been saying this since March, and stay done, right? Then you will start to see confidence return, but I still think it's going to take several months. So some of our panelists are saying, we're cooked for this year, and next year's not looking much better. And some are saying
Yeah.
we're hopeful for next year. So I think it all depends on what the administration does and what deals get struck, and staying the course once the course is picked.
Okay. Yeah, well said. Let's shift gears over to the role of automation within manufacturing. And when I say that, I'm thinking of things like robotics and AI, for example. Especially the latter, AI, you're hearing so much about it, but both of them, and there's obviously other examples too, but where do you see the role of those types of things as it relates to automation on the manufacturing front?
There's a great quote that I read years ago, and it is technology is humanity's accelerant. And I love it. I even used it with
Hmm.
my own team at FedEx because we were doing some robotic process automation long before AI was really kind of a current thing. So
Right.
my feeling on those technologies advances are real game changers, and they can free up the employees to focus on the higher level thinking tasks that only a human can do. The question is, number one, are employees willing to undergo, their own transformation to, and to really upskill and be able to do those jobs. And our companies willing to invest in that. And in some cases, employees will have to go seek a career elsewhere in order to get that. So, the best thing I think we all can do as humans is stay informed about what's going on in our industries relative to the current job and have our own personal training plan, a career plan, if you will. I certainly had some team members that were up for that and, transformed, and then some that were, took the opinion, I like to do the repeatable, predictable thing. And I was very grateful for their honesty because I said, okay, but in a couple of years, that'll be fully automated. So let's see, how can we help you maybe search for something else, right?
Hmm.
And
Hmm.
being honest about that conversation. What else, when else it was helpful is when we couldn't backfill, because we certainly had years at FedEx where we couldn't do that. So we would free up 25, 26 people and just redeploy. And again, you had to do some upskilling, but I think it's wonderful. Will a robot take my job? Maybe, but your job is to think about, what else is it that you can do and how can you transform yourself? Our chairman used to have used to have a phrase, I don't know if he coined it, but he said, if you hate change, you're really going to hate extinction. And I loved that. I
Yeah.
used it, crediting him. It's tough. Not everyone's in the position to be able to do it. So I look forward to it. Personally, I'm really loving, what maybe ChatGPT or, AI can do with my searches. As my kids said, okay, Mom, go Google it.
Yeah.
It's like,
Yeah.
well, I'm gonna, I'm gonna, and don't believe everything you see. But, you know, even, research I do, independent research that I do for the monthly report, it is at my fingertips. I'm not spending hours and hours. I'm spending, less time so I can really focus on what do I think of this data? What can Sue's
Yeah.
only do, but let me get the data, right? Not only from the wonderful team at ISM, but let me see what the BLS is saying, what is trading economics saying, and where's GDP going, right? So I'm a fan. Of course, I'm retired now, so it's easier for me to say that.
No, understood. I'm not quite there yet, but I also have been able to leverage AI mainly on the editorial side for writing headlines.
Sure. Great. Wonderful.
Yeah, been very helpful. Just a couple more quick ones before we wrap here, Susan. One would just simply be, and we talked about this last time because actually I believe it was day one of the
Yeah, it was.
ongoing government shutdown, and it's now we're closing in. We're 30 days in here,
Yeah.
and it's hard to see any real material signs of progress. I mean, so that said, how has it impacted manufacturing, and how could it further impact manufacturing,
Yeah.
depending obviously on how long it may go?
Right, right. Well, I don't, again, I can't talk about the data in Monday's report. I remember talking to you, and I got preempted by the White House announcement of the government shutdown, which was probably
Yes.
10-1. We'll see. We'll see. I read somewhere yesterday that we're going to start to see the federal employees hit the unemployment numbers. Of course, that's now not published because the BLS is shut down. But I mean, I think about those families and, folks that just are going a month now. It's not a couple of days.
Yeah.
So we'll see what the impact is. Last month, I think I cited, my experience with shutdowns in the past in aerospace is, especially with defense contracts, not having the government employees in there as often to sign off on hardware and, you know, but when it lasted a few weeks, it's like, okay, you can just kind of hold tight, but, it's not good. And we've got a lot of other things going on that's going to impact the average family. So, and we're coming into the Christmas season, so it is not a happy time. And are folks going to be cautious and spend less because maybe they're on furlough or, the prices are going up? Yeah, it's not good for the economy. So obviously, get the deal done, get the deals with the trading partners done so we can maybe recover, hopefully in short order, what we had, coming into the new year.
Yeah.
We'll
Yeah.
see.
Yeah. No, only time will tell on that. And Susan, I just had one more quick question, which I forgot to include initially. And I just wanted to let the audience know, or have you tell the audience about the ISM's semi-annual forecast report, which semi-annual obviously comes
Yeah,
out twice a
yeah,
year.
yeah,
What is it? What's in it? What is sort of the objective and or mission of that report?
yeah. Okay, gosh, I wish you sent me that question ahead. I have never done one. That's
Oh, I
amazing.
thought you would. I thought
No,
you
no,
would.
no. You know what? The team is so kind there. The semi-annual report that came out in May was my first month, and we made the
Okay.
collective
Okay.
decision that we don't want to scare away our volunteer in her first month. No, I'm teasing. The team did a really wonderful job. So I'm going to be getting into it to see it. And that's going to happen in December. So I like the word forecast,
Yep.
and the data is going to be, it's a lot of survey questions for the same folks, which is fine. But I would just pay attention, and I'll get a little more familiar with it. Sorry, that's the
No, of
thing I'm
course.
not.
I for some reason I thought you had been part of that one, and I just
Yeah, you know what? I was a little bit, but I'm going to be better informed coming up on this one. But these monthly reports, listen, I used to consume them when I was working. I really didn't understand what went into it. It is fascinating to me. I am a data nerd. I love the information.
yeah.
And when I started really getting into it, especially reading through hundreds and hundreds and hundreds of comments, it's like, whoa. I didn't really realize how informative it was, and I was actually using it, right? So
Oh,
I
for
can only
sure.
encourage
I
that.
mean, and then the next one is in December, so everyone
Yeah,
could keep an eye out for
yeah, for
that.
sure. Yeah,
Um, and I'll just tell you because I talked to your predecessor Tim Fiore
yeah,
and Steve Miller, the current services chair, and prior to him, Anthony Nieves. I
yeah,
always enjoyed I always do enjoy in that report. At the end, they always have what's referred to as the special question section, which
yeah,
basically could be about anything. It could be about
yep,
tariffs. It could be
yeah,
about sustainability. I guess maybe this next one. I hope it's not, but it could be about the government shutdown.
yeah, maybe.
If it's still going on, let's hope it's not. But
Yeah,
I
let's.
mean, there's all kinds of different things, and it's such an interesting group of people to be
Yeah,
asking these questions too. So again, that's my sort of personal favorite part of those reports.
yeah.
Uh,
I've known Tim for almost 30 years. We actually worked at UTC,
ah,
not together in the same office. He was a few years ahead of me, but when I was talking to him about accepting the role, because it's a big role, it's an important role. Sometimes we all have some self-doubt, and he's just really good about telling me, he's like, you have had the job for decades. Of course you're going to know what you're doing. I'm like, all right, Tim, geez, I'm
yep.
just getting used to, mowing my lawn and golfing, whatever. And then I got into it, and it was like, oh wow, oh wow, and when I was on, I think we have between 10 and 12 interviews on media day, and they're rapid and they're really,
Yeah.
but it was very natural to answer the questions, not just because I had all that raw data and all the wonderful insights, but because I could reflect back on when I did the job and said, of course, this is how people feel, and it immediately was relatable. So the people you mentioned, they are experts. We had the job, we started as buyers, and we didn't know anything
Yep.
in the 80s or whatever. And then, I mean, my biggest thing in my whole career as far as crisis and chaos was COVID, and
Sure.
managing, trying to manage on these commodities called PPE and safety supplies that we didn't give a second thought to, because it's just, you just go buy stuff. It's,
Yep.
yeah, until you can't get it. And then it was nuts. It was just crazy. So, um, I am really happy to be retired. I'm having a great time. I'm doing important things, including, personal things. I have a friend,
Sure.
but looking back on the career and saying, I may not have ever gone through tariff chaos, but I know what that chaos looks like, and how every month someone could be, breathing down your neck, maybe the CFO, to say, where can you take costs out of the product? And those are long-term strategic things. You just can't turn on a dime for that. The only way to do it is to just not buy, or hold
Yeah.
off as long as you can. And it seems that's what's
Exactly.
happening.
Exactly. Well, look, Susan, this brings us to the end of our allotted time for today's podcast. So On behalf of Logistics Management Magazine and also the Peerless Media Supply Chain Group, I'd just like to offer up a big thanks for spending some time with us today.
Thank you so much. It was really fun. I appreciate it.
Yeah, absolutely. And thanks again. And for those of you on LinkedIn, Susan is on LinkedIn, so just search and look for her. It's Susan Spence, Spence. And also, please go ahead and check out the ISM's website. It's full of great data and information, and that's simply ismworld.org. And also, please go ahead and feel free to give us Logistics Management a follow on Twitter. That's at Logistics MGMT. And also, please look for the Logistics Management Podcast wherever you get your podcast. It should pop right up. So, thanks, everybody. Have a great day, and we'll talk to you soon.